So, you've given us this fascinating set of documents. We've got annual reports, internal memos, the works covering several years of Schneider Electric Infrastructure Ltd.
That's right.
And let's be honest, wading through all that, it can feel like a full-time job.
It definitely can. Hundreds of pages sometimes.
Exactly. So consider this your express lane to understanding what's really going on inside the company.
Good way to put it.
We're going to try and dissect their corporate governance, trace their financial journey, say, from 2019 up to 2023, maybe a bit beyond, and really get a clear picture of their sustainability efforts as well.
Precisely. And we're not just, skimming the surface here. Our goal is to extract the core insights.
Right.
How is this key player in the energy infrastructure sector actually structured? What's driving their strategic decisions? And importantly, how are they addressing responsibilities to stakeholders?
Stakeholders, yeah.
We'll be looking at shifts in the boardroom, the levers behind their financial performance, and maybe some of the tangible impacts of their environmental and social programs.
Okay. Sounds good. So let's dive right into how the company is organized at the top then. What can you tell us about their corporate governance structure? Who's leading the charge?
Well, the board of directors saw a significant change back in 2022. Mrs. Namrata Kaul took over as chairperson then.
Okay.
And if we look at the composition, say, as of March 2022 and then March 2023, we see a pretty consistent structure. You've got a managing director and CEO leading the executive team. There's a whole-time director involved in day-to-day stuff.
Right.
Several non-independent, non-executive directors. These folks often have ties to promoters or major stakeholders.
Okay, the insiders, sort of.
Kind of. And importantly, there was at least one woman director in this category in both years we looked at.
Good to note.
And then you have a number of independent non-executive directors. Their role is really at impartial oversight, again, with female representation there too.
That's a good overview of the different roles on the board itself. Now, what about the committees? The groups doing the detailed work. Who are the key players there?
Yeah, the committees are crucial for checks and balances. Take the audit committee, for instance.
Right.
As of March 31st, 2020, it had 5 non-executive directors. Now, 4 of those were independent.
4 out of 5, okay.
And the chairperson was independent, too. That strong, independent presence. It's generally seen as a positive sign for, robust financial oversight.
Less chance of undue influence from management.
Exactly. And interestingly, key figures like the CEO, the CFO, the internal auditor, even the statutory auditors, they were all regular attendees at these meetings. Shows the committee's importance.
Okay, so that's the financial oversight covered. What about the people deciding on, say, leadership appointments and how executives get paid?
Right. That falls under the Nomination and Remuneration Committee. Or NRC.
NRC, got it.
Back in March 2020, it comprised 4 non-executive directors. 3 of them were independent, and the chairperson was independent as well.
So similar structure, heavy on the independence.
Yes, the aim is objectivity in those really key decisions about leadership and compensation. And then, of course, there's the Corporate Social Responsibility Committee.
Right, the CSR committee.
Yeah, overseeing their social impact initiatives, making sure they align with the company's broader values and Schneider's global philosophy.
Making sure those community efforts sync up with the overall mission. Now, I noticed you mentioned a finance and banking committee, too. What's their specific role?
Ah, yes. That committee is more focused on the company's day-to-day routine banking requirements. As of March 2022 and 2023, it had 3 directors a mix, actually. Non-executive, non-independent, and an executive director.
And how active were they?
Well, this is interesting. In FY23, although they were authorized to meet, no actual meetings were held.
Really? None at all?
None. Instead, 4 necessary actions were approved through circulation, passing papers around.
That's interesting. I wonder, could that lack of formal meetings suggest things were just running smoothly? Or maybe a missed chance for deeper discussion on finance strategy?
That's a really good question. I mean, efficiency is one angle, right? Approving by circulation can be quicker.
Sure.
But it does make you wonder about the level of sort of dynamic discussion happening. Maybe their internal memos, which we also looked at, give more context on what was approved that way. From the outside, though, it's a point to note.
Definitely. So, shifting slightly, when a new director joins this board, how do they get them up to speed? What's the induction like?
They seem to have a pretty well-defined process. New directors get what they call a comprehensive familiarization pack.
Okay. Sounds official. What's in it?
It's quite thorough, actually. Contains details on the organizational structure, the company history, their foundational documents like the memorandum and articles of association.
Rule book, basically.
Yeah. Plus the latest annual report, their Principles of Responsibility document, which outlines corporate values, key policies, even summaries of past board meetings. It's designed to give us solid grounding.
It does sound pretty comprehensive. Is that typical compared to other companies you've looked at?
Generally, yes. This level of detail is definitely in line with good governance practices, especially for publicly listed companies. You want new directors contributing effectively quickly.
Makes sense.
Yeah.
Now, how does the board look inwards? Do they evaluate their own performance?
They do. They conduct an annual performance evaluation
Oh.
using structured questionnaires. This lets them assess not just the board's overall effectiveness, but also individual director contributions, the chairperson's role, and how well those statutory committees we talked about are functioning.
And what happens with those results?
The findings get reviewed first by the Nomination and Remuneration Committee and then by the full board. It shows a commitment to continuous improvement, which is positive.
Okay, a commitment to self-assessment there. That kind of mirrors what you mentioned about their approach to ensuring a safe workplace too, right?
Absolutely. Schneider Electric Infrastructure is very clear. They state a zero-tolerance policy for sexual harassment.
Which is crucial.
And they have a formal policy that's aligned with India's 2013 Act on this. Crucially, they've set up internal complaints committees, ICCs, at all their locations.
ICCs at every site.
Yes. They're the first point of contact for receiving and addressing any complaints about sexual harassment.
That's fundamental for a responsible company. Okay, one more governance point. How do they handle potential conflicts of interest, like deals involving related parties?
They have a specific policy for that, related party transactions. The audit committee plays a really vital role here.
How so?
They're responsible for reviewing and approving these transactions. That oversight is key for transparency and, preventing any potential misuse of company resources or self-dealing.
Right, keeps things above board. Okay, that gives us a solid understanding of how the company's run from the top. Let's shift focus now to the numbers. What's the big picture on their financial performance over the last few years?
All right, so their financial year runs April 1st to March 31st, standard for many Indian companies.
Right.
Looking at the headline figures, let's compare FY 2022-23 to the year before, FY 21-22. We see a healthy rise in operating revenue. It went from about 15,300 million rupees.
Okay, 15.3 billion rupees.
Yeah, up to nearly 17,800 million, so roughly 17.8 billion rupees.
A decent jump in revenue. What about the bottom line? Profitability.
Profit after tax, PAT, showed a really, really significant leap in FY 22-23.
How significant?
It reached over 1,236 million rupees, compared to just 276 million the year before.
Wow, okay. From 276 million to over 1.2 billion rupees. That's dramatic.
It is a huge increase. We also saw positive movement in EBIT earnings before interest and taxes, which shows their core operational profitability. Although depreciation and net interest expenses did fluctuate a bit during that period.
But that profit jump is the headline. What were the key factors driving that surge? Any clues in the internal docs?
We can piece some things together. For instance, in one quarter, they reported really strong order intake growth, 27.5%.
Okay, nearly 30% growth in new orders in one quarter. Where was that coming from?
It seems particularly driven by the cloud and service provider segments.
Ah, the digital infrastructure boom.
Exactly. Looks like they successfully capitalized on that demand. Also, the mining, mineral, and metal industries were significant contributors to.
So strong new business wins were a major factor. What about their existing workload, their backlog?
Their reported order backlog was quite substantial, around 1,000 crores or 10 billion rupees. And they broke that down further into term-based projects, shorter-term transactional orders, and ongoing services. A healthy backlog like that gives them, a degree of predictability for future revenue.
Makes sense. Visibility is key. Can you give us a feel for where the revenue actually comes from, like the different business segments?
Sure. They categorize revenue into a few buckets. There's equipment sales, revenue from executing projects, transactional business, which likely involves more standard products.
Off-the-shelf type things?
Probably. Then there's services and also a category called IG. We think that likely stands for industry group. representing revenues tied to specific industrial sectors.
Okay, a few different streams there. And how are they doing on managing cost and margins, keeping that profit healthy?
Well, they highlighted a notable improvement in their gross margin in one specific quarter, hitting 37.6%.
That sounds pretty healthy. Why the improvement?
They pointed to two main things. First, raw material costs started to normalize after being volatile.
Okay, supply chain pressures easing maybe?
Could be. And second, a more favorable mix of the products and services they were selling, likely higher margin stuff.
Right.
And their stated goal is to try and maintain similar levels of gross margin going forward. They've also expressed ambition for continued year-on-year improvement in their overall P&L.
Sounds like they're focused on building, a sustainable financial growth path. Okay, let's pivot now to their broader strategy. Beyond the numbers, what's the overarching vision? What's guiding them long term?
Their vision is quite broad, actually. It's not just about financial success. They talk about contributing to India's Human Development Index
Thank you.
and operating as a socially responsible corporate citizen with strong environmental awareness.
So definitely looking beyond just the balance sheet. What are their specific objectives then relating to that broader vision?
Well, in terms of CSR, corporate social responsibility, they aim to align their activities closely with Schneider Electric's global philosophy. A key objective seems to be improving the quality of life and economic well-being in the local communities where they operate. And at the same time, strengthening Schneider's reputation as a responsible company.
Makes sense, reinforcing the brand through good deeds. How are they translating this into action, maybe on a technology level?
A really central pillar of their strategy is bridging the physical and digital worlds,
How so?
mainly through deploying IoT-enabled solutions. And their EcoStruxure platform is key here.
EcoStruxure. Heard that name before.
Yeah, it's essentially their digital backbone. It lets different physical assets and systems talk to each other, be managed more intelligently. The promised benefits for customers are things like better safety, reliability, efficiency, sustainability, and connectivity.
So EcoStruxure is the tech enabler. Where are they focusing their market growth efforts?
Strategically, they're zeroing in on accelerating growth in emerging high-potential markets.
Like what?
Things like electric vehicles, EVs, the semiconductor industry, data centers, obviously, and renewables,
Right.
big growth areas.
Right.
But at the same time, they're also committed to strengthening their position in their existing core sectors. So it's kind of a two-pronged approach. Expand and reinforce.
That sounds like a smart way to play it in a changing market. What specific kinds of solutions are they offering to achieve this?
Their offerings are pretty wide-ranging. Energy-efficient equipment, complete electrical distribution systems, sophisticated software for energy management.
And do they help customers use this stuff effectively?
Yes, they mention investing significantly in training and development programs, both for their customers and their partners, recognizing that adoption is key.
Good point.
Yeah.
And it feels like digitization is just
Yeah.
everywhere in their strategy across different industries.
Absolutely. They're actively pushing digital transformation in sectors like minerals, mining, metals, industrial buildings, cloud service providers.
You mentioned EcoStruxure Asset Advisor earlier.
Yes, that came up in the internal memos. It seems like a prime example. It helps build that service stickiness, keeps them connected to the customer long term, and helps clients get more efficiency out of their assets.
So more than just selling a box, it's an ongoing relationship.
Exactly. And finally, thinking about the bigger energy picture, how are they positioning themselves with the rise of renewables?
Yeah, that's a huge shift.
They clearly recognize it. They talk about the need for smarter electricity grids to handle the intermittency of renewables.
The sun doesn't always shine, the wind doesn't always blow.
Precisely. So their solutions are designed to support this transition. They enable smarter energy supply through smart networks. They facilitate demand-side management, offer integrated management systems, basically tools to handle the complexities of a modern, greener grid.
Okay, got a clear sense of their strategic priorities there. Now let's dig into their actions on sustainability and social responsibility. What are some key initiatives?
One really significant one is their rural electrification program.
Tell me more.
Through this, they've provided clean energy access to literally thousands of households. States like Jharkhand, Bihar, Odisha, Arunachal Pradesh, J&K.
Wow, quite a reach. What kind of things are they doing?
Installing solar rooftop systems on schools, distributing solar lamps in villages, providing solar UPS systems for essential services like hospitals. Really practical stuff.
That sounds incredibly impactful on the ground level.
Yeah.
Any other initiatives focused on livelihoods or economic empowerment?
Yes, under a project banner called Energy for Livelihood, they've installed solar-powered water pumps.
For farmers.
Exactly. And the reports suggest this has had a direct positive impact on farmers' incomes. Less reliance on expensive diesel or erratic grid power for irrigation, boosting productivity.
That's a great example of sustainability driving economic benefits.
It really is. And importantly, these efforts tie directly into Sustainable Development Goal 7 SDG 7, which is all about affordable and clean energy.
Good to see that UN goal alignment. What about their broader commitment to ESG, environmental social governance?
They've publicly stated they're committed to integrating ESG right across their business, delivering sustainability throughout their whole value chain.
So looking beyond just their own factory gates.
Yes, considering the impact of their products, services, their supply chain too.
Okay, what about within their own operations? Any concrete examples of environmental efforts?
Yeah, at their factory in Kolkata, for instance, they've implemented quite a range of energy conservation measures.
Like what?
They've achieved ISO 5001 certification for energy management. They've done green initiatives like planting mangrove trees in the Sundarbans, which is interesting, deployed power monitoring systems, switched to LED lighting, conduct regular energy audits.
Sounds like a pretty comprehensive approach to cutting their footprint.
Yeah.
Are they using alternative energy sources themselves?
They are taking steps, for instance, installing solar water heaters in their canteen to cut electricity use,
Makes sense.
and using things like sky tubes to bring natural light onto the factory floor, reducing the need for artificial lights during the day.
Smart. Every little bit helps. What about the manufacturing processes? Any environmental improvements there?
They highlighted efforts there too. Things like reducing work-in-progress inventory, which streamlines processes and cuts waste. And they also managed to eradicate VOC's volatile organic compounds from their surface treatment processes.
Which is good for air quality and the environment.
Definitely. Significant benefit there.
Okay, switching to the S in ESG, the social side, what about their employees and workplace culture?
They seem committed to fostering an inclusive environment. They mentioned several key policies.
Such as?
A global family leave policy, offering flexible work schedule options for better work-life balance, and conducting regular pay equity reviews.
Pay equity reviews ensuring fair pay regardless of gender, etc.
That's the goal, yes. They also actively focus on diversity hiring and initiatives around employer branding to attract diverse talent. And underpinning all this is their Principles of Responsibility document guiding corporate behavior.
Sounds like a well-rounded approach covering both E and S. Now, let's briefly touch on risk management. How do they handle potential risks?
Well, the board actively reviews the company's financial risk management policies.
Yeah.
These cover the main areas: market risk fluctuations in prices, credit risk customers not paying, and liquidity risk making sure they have enough cash.
Can you briefly elaborate on how they manage those?
For credit risk, it involves assessing the creditworthiness of customers and the banks they work with. For liquidity risk, it's about maintaining adequate banking facilities and constantly monitoring cash flows projected versus actual to ensure they can meet obligations.
Standard financial hygiene, but important. What about internal controls, preventing mistakes or fraud?
Yes, their external auditors give an opinion on whether the company's internal financial controls over financial reporting are adequate.
And do they find anything concerning?
It's noteworthy that in the FY 2021-22 report, the statutory auditors specifically stated that no instances of fraud were reported to them.
That provides a level of assurance. Okay, finally, let's talk about shareholders. How does the company communicate and engage with them?
Annual general meetings, AGMs, are the primary forum. We saw details for the FY 2019-20 meeting, which was held via video conference, likely due to the pandemic, and the FY 22-23 AGM included the key vote on adopting the financial statements.
And how do shareholders participate, especially if it's remote?
They provide detailed instructions for remote e-voting during the AGMs. They also formally announce when the shareholder register closes before the meeting. Importantly, annual reports and AGM notices go out electronically to members with registered email addresses.
Do they encourage big investors to attend?
Yes, they explicitly encourage institutional investors to attend and vote remotely via VC or other audiovisual means.
And after the AGM, how are the results shared?
Promptly. The voting results? Along with the scrutinizer's report, that independent check on the voting are put up on the company website and the registrar's website, KFintech.
Okay.
And they're also formally communicated to the stock exchanges, BSE and NSE.
What about unclaimed dividends? Stuff shareholders haven't collected.
There are rules for that. Any dividends unclaimed for 7 straight years, plus the actual shares linked to them, get transferred to the IEPF authority.
The Investor Education and Protection Fund.
That's the one. A government body protecting investors.
Got it. And are there any current messages or requests for shareholders, things they need to do?
Yes, definitely. They've been pushing shareholders who still hold physical share certificates.
Paper shares. People still have those.
Apparently so. They're urging them to provide PAN details, KYC information like address proof, and nomination details. This is all driven by SEBI directives pushing for dematerialization, getting shares into electronic form.
Makes trading and everything much easier.
Exactly. And they've emphasized they no longer accept physical share transfers or transmissions. The message is clear: dematerialize your shares.
And if shareholders have questions.
They provide clear contact details for the company's secretary and compliance officer, and also for the registrar and share transfer agent, KFintech, for any queries or help needed.
All right, we have covered a lot of ground here. To try and wrap this up, what would you say are the key overarching takeaways from this deep dive into Schneider Electric Infrastructure Ltd?
Okay, well, I think we've seen a company with a clearly defined governance structure. There's an emphasis on independent oversight, well-structured committees. That's clear.
Right. Governance seems solid.
Financially, they've shown strong growth recently, looks driven by smart strategic focus on growth markets, like we discussed, and also decent cost management, judging by the margin improvements.
Okay, growth and efficiency.
Then there's the commitment to sustainability and social responsibility. It seems genuine, with tangible initiatives from rural electrification right down to environmental tweaks in their factory.
More than just talk.
Seems so.
Yeah.
They also appear to have robust processes for managing financial risk and internal controls, backed by auditor statements. And finally, they clearly prioritize communication and engagement with shareholders using the AGM and electronic means effectively.
So for you, our listener, hopefully, you now have a much rounder understanding of Schneider Electric Infrastructure, Ltd, how they're run, how they're performing, their priorities, and importantly, without needing to spend days reading all those source documents yourself.
Exactly. We did the legwork.
We did the heavy lifting.
This whole exploration really highlights a central challenge, I think, for companies in this sector. How do you balance that pursuit of financial growth with the ever-increasing demands for environmental sustainability and social responsibility?
That's the tightrope, isn't it?
It really is. And Schneider Electric Infrastructure's approach, as we've seen it in these documents, provides a pretty valuable case study in how one major player is trying to navigate those multifaceted challenges.
Absolutely. A fascinating look. Now, if you, listening, have a set of sources, documents, reports, articles that you'd like us to tackle in a future deep dive, please send them our way. We really do tailor these explorations for you.
We do.
Until our next deep dive, keep learning.